welcome back to this Moneycontrol live stream. You're watching Closing Bell with me, Nandita Khemka.
And I'm Yatin Mota.
Hi Yatin, good to have you back after 2 days of hiatus. But with that, let's take a look at how the market shut shop this Friday evening. The Nifty managed to stage quite a remarkable turnaround, given the fact that it has come off nearly 120 points from the day's low and managed to end just about near that 18,200 level. But the broader end of the markets were a little muted by the end of trade. And if you look at the top sectoral movers, it's the IT pack that managed to gain somewhere around 1.5%. You had realty, banks, autos. These were among the top sectoral movers, but pharma was one sector that was under the weather. Among the top Nifty gainers, Adani Group of shares made a very good comeback after the findings of the Supreme Court's expert panel were made public. So Adani Group shares, Adani Ports was the top Nifty gainer. You had Tata Motors, Tech Mahindra, Infosys and HCL Tech. On the flip side, Divi's Labs ahead of its earnings. Remember, the company will be reporting its fourth quarter earnings tomorrow. Ahead of that, the stock is under pressure even yesterday. In fact, a couple of sessions over the last in this current week, it did see some bit of weakness come in. Tata Consumer, Britannia, so some of the consumption shares, NTPC and Hero Moto were among the top laggards. From the mid-cap end of the market, Gland Pharma was down 20%, right? Aside of that, you had RITES, Uno Minda, PNB Housing, those were some of the losers. And when it comes to gainers, KC International and some of these Adani Group shares, as I mentioned, Wilmar, Adani Transmission, Ramco Cements, after strong set of numbers, of course, did clock in handsome gains of somewhere around 7 to 8% or thereabouts. Well, that was all about the market action, but let's also talk about the report, the Supreme Court's expert panel report on the Adani Hindenburg saga that was made public. Share with us the key findings of that report, Yatin.
So obviously today Adani Group stocks were in focus, simply because the committee report was made public, and more importantly, there was no adverse finding because of which there could be some impact on the share price. Because there was no finding or no particular outcome of the investigation till now, because it is under investigation. And when it is during investigation time, SEBI has always said that they will not be able to tell clearly if there were violations or if there are no violations. So probably on the SEBI current investigation, there is status quo. There is no particular finding which has been made public, which is quite adverse. In fact, if you look at the committee report, it clearly mentions that the short selling on Adani stocks happened before the Hindenburg report was released, and there are certain entities which benefited. Obviously, now SEBI will investigate whether or not these entities made money because of the Hindenburg report, or they knew that the report was about to get released and hence short positions were taken, which is again not allowed as per Indian regulations. There was no manipulation done with respect to stock prices by the Adani Group. There were no compliance issues or violations found with respect to minimum public shareholding norms. The committee has also said that there was no regulatory failure with respect to the Adani Group share price fall. In fact, because the retail shareholding in Adani Group stocks went up, Adani has taken necessary steps in order to protect the interests of the retail shareholders. And finally, SEBI has not proved that its suspicion can be translated into a firm case. Probably this committee report probably indicates that there is no wrongdoing as such which has been done in the past or has been found currently, probably because of which most of these Adani groups were flying in trade.
Well, Adani Group stocks, of course, staged quite a remarkable turnaround in the second half of the session, which really changed the complexion of the markets by the end of trade. Let's now take a look at some of the stocks that are on our radar. I was mentioning Gland Pharma being one of the top Nifty 500 losers. And, obviously so, because the stock has hit a 52-week low after a very poor set of numbers. The Q4 EBITDA margins were lowest since the stock actually listed back in November 2020. It was the fourth straight quarter of revenue and profit decline for the company. Yatin, stock is off 80% from its life highs. It had listed at, a good 14% premium to its IPO price as well. Street is pretty divided, even though the outlook is very negative when it comes to the management. It has not given any guidance. And there has been loss of business also for the company, given the fact that one of its clients had filed for Chapter 11 bankruptcy, because of which there was loss of business. Another customer seems to have shifted to a competitor. So there was loss of business. There was a plant shutdown in Telangana, because of which, of course, numbers came in weak. And aside of that, all of its geographies have contracted in fourth quarter. As I said, no guidance from the management, and demand is soft. So all in all, challenges galore for Gland Pharma. Brokerages believe that there are a couple of launches. In fact, 10 to 11 launches slated for in the first quarter of the current fiscal FY24. So subject to how the launches turn out, and whether the company manages to regain market share, these two factors will lead to a slowish recovery for this company. Even though at a PE of 22.6, it's pretty cheap, but given the fact that there are so many challenges ahead for the company, looks like the going will be a little rough.
Stock is down nearly 60-70%, even more, I think.
Yeah, 80%
from the recent high that it made post the IPO.
Yeah,
but
so
anyways,
challenging road ahead for Gland Pharma.
Clearly. If you look at the markets, they have been quite upbeat about good earnings and equally downbeat about bad earnings, because the reactions that we are seeing in certain stocks has been quite strong. That was Gland Pharma, but if you look at PNB Housing Finance, this is one stock which is on the radar of Morgan Stanley. They have a overweight rating on this one. They've raised the target price to 630. Remember, PNB Housing recently concluded their rights issue, which was quite successful. If you look at FY24, Morgan Stanley does believe that there could be some growth which could move up, and the asset quality should improve, which means that the bad loans will start falling every quarter from here on. At 0.7 times book, which is probably 30% discount to the book value, the valuations for PNB Housing are quite attractive, and hence they are bullish on this particular counter.
Right, PNB Housing, bullish view coming in. And let me also mention that PNB also just reported its earnings, multi-fold jump in profit, and the stock ended high by about 2% or thereabouts. The other stock on my radar is Integlobe Aviation. Stock didn't really do much in today's session, but earnings were really, good. If you talk about the profit, in fact, it reported a 900 crore rupee profit vis-a-vis a loss of somewhere around 1600 crore rupees or thereabouts on a YOY basis. Revenues were also up 76%, and margins were north of 20% vis-a-vis 2% on a YOY basis. And the street is pretty upbeat. Morgan Stanley has an overweight rating with a target price of 3,126. JP Morgan also overweight, and it has raised its FY24, FY25 EBITDA margins estimates by 12 to 7%. The recent April aviation data shows that Indigo remains the market leader, and it has a market share of 57.5% for the month of April, vis-a-vis 56.8% in the previous month. Now, if you look at the stock price, it has rallied somewhere around 15%, rather skyrocketed 15% in the last 1 month, and which is why it didn't really pick up on the back of strong earnings. If you talk about what's happening in the aviation space, we saw Go First, of course, the issue, the saga coming to the fore.
NCLT.
But the thing is that it has all cashed in on that and increased its flight operations. And in fact, it is a busy summer season. There's a travel demand at its peak. So that is something that will bode well for the company. Management, of course, has given a very positive picture, saying that they aim to double capacity by the end of the decade. And they are also in touch with original equipment manufacturers to iron out any supply issues that may be there. And it's also working to increase its international presence with the help of code share pacts as well as loyalty programs as well. But what brokerages say that it's an intensely competitive space. So how the entry of Akasa Air, and how the way Air India is also being resuscitated. So all these factors will actually determine how the path turns out for Indigo going forward. But all in all, looks like the next quarter also promises to be pretty good, given the fact that July, June is when people mainly go for vacations, May, June, July. So that the coming quarter also looks like is going to be pretty good for Indigo,
especially when the crude prices are low.
Yeah.
That's about Interglobe Aviation. Let's wrap up quickly, because the last stock on my radar is Bata. Strong revenue growth versus expectations. In fact, you look at the revenue growth, it was close to 17%. Margins improved significantly. And if you look at the expectations, Street was expecting a margin figure of close to 21, but the company delivered 23.4 in terms of the margins. Profits also moved up significantly, almost 20% higher than expectations. Now, the results were good, but the expansion plans are quite strong. In fact, if you look at the company, they plan to have nearly 1,350 towns in their distribution ship. In fact, they also are looking at the sneaker category, which is growing quite aggressively. In fact, the sneaker sales in Q4 jumped by nearly 2 times on a year-on-year basis. If you look at the store expansion, they have currently 2,500 stores in 700 cities. So quite aggressive in terms of the expansion plans here. And yes, new products like sneaker category, where the margins are high, are also doing quite well, wherein the market has really appreciated the earnings. Today, the stock was also moving in trade. The top F&O gear in opening trade, but slightly cooled off. But yes, good performance from Bata.
Good performance from Bata, you may say a spring in their steps. Well, with that, I think we've come to the end of this edition of Closing Bell, but we'll be back. Of course, I actually want to wish Yatin a very happy weekend, given the fact that he's already had 2 days away from the show, but still, Yatin, wish you a very happy weekend, and wishing all our viewers also a very happy weekend. We'll be back with the markets on Monday morning, so tune in, and in the meantime, have a great weekend. Thanks a lot for watching.